Hi, it's Larry Gaines from OptionsOnTheOpen.com. We are the leaders in option day trading. I wanted to review two of the indicators that I use on our day trading model at Options on the Open. They are the Bollinger Bands and the unbalanced volume indicators. The trading model that I put together for our option trading is highly accurate, giving us trades that have a very high probability of making money. Plus, this model works great across all time frames and asset classes. Since I started using this model on actual trades this past July 2010, its cumulative average of winning trades is over 75%. So it provides us a trading tool with a very high degree of accuracy. Now I'd like to show you this breakdown from July through January. Total winning trades for January 2011 to date is 84%. Total winning trades in December 2010 was 87%, November 75%, October 69%, September 69%, August 72%, and July 72%, for a total cumulative average of winning trades of over 75% actually. Now let's take a look at Bollinger Bands and unbalanced volume, those two indicators. The Bollinger Bands are the top, are these red lines here. This is the top part of the channel. Here's the bottom part of the channel for a Bollinger Band, and here's the moving average. This middle band here is the moving average, and for day trading we set it to a period of 12, and then it's 2 standard deviations away from this moving average for the upper band and 2 standard deviations away to the bottom for the bottom of the Bollinger Bands. Now when the Bollinger Bands compress, that's showing that volatility is coming off. When Bollinger Bands expand like here, that shows that volatility is increasing. Now the next indicator that I wanted to go over is the unbalanced volume. So here's the unbalanced volume indicator. This yellow line represents the unbalanced volume indicator. And what that indicator does, it's the total volume for each period is assigned a positive or negative value depending on the price being higher or lower for that period. A higher close results in a volume for that period to get a positive value, while lower close results in a negative value. So when prices are going up, the unbalanced volume indicator should be going up too. And when prices make a new high, the unbalanced volume indicator should make a new high as well. Now if the unbalanced volume, like here, fails to go above this prior high, it's suggesting that you're starting to have negative divergence and you're starting to see weaker prices come in. The idea of this is that it'll show on periods of higher volume, you will see this with the prices moving up, and it'll be moving up in the dominant direction of higher prices. So this shows a strong uptrend based on volume coming in and more demand than supply. So this is a great forward-looking indicator versus moving averages, which are backward-looking indicators. So this is one of the major indicators that we also use in the model. Now let's look at the option day trade we did this past Friday, January 21st, and this was on F5 Networks. F5 Networks is a stock that's in the cloud computing space, and it can be a real high flyer with a lot of volatility and a lot of price movement. So using our indicators, which Bollinger Band and unbalanced volume represent 2 of the indicators within our model, but not the only indicators, and not actually the prime indicators, but they are indicators which give us direction. So based on our indicators, we entered into this trade on a daily day trade basis using the February 110 calls, which we bought right here at around 8:45 a.m. Central. We bought these at $6 per contract, and you can see it was the perfect timing based on our indicators and our model indicator. Price had come down here, and we picked it off on a perfect bottom using our indicators in this model. And here's the unbalanced volume. You can see it popped up, and you can see the trend developing here. On balance volume kept getting higher and higher. Finally, we got up here on the Bollinger Bands, started moving away, and this is a sign of weakness or starting to lose momentum. So we exited our position right here. And you can also see that right when we got out at this time frame, about 8:54, the on-balance volume started coming off. So this is these are two indicators that we use to manage and help us enter a position with the on-balance volume, and to exit the position using both on-balance volume and the Bollinger Bands. So in this particular trade, we put it on at $6, took it off at $6.40 for a total profit of 40 cents per contract. One option contract equals 100 shares of stock, so that's $40 per contract, and we did all this in less than 10 minutes. So this was a return on our trading capital of 6.66% in less than 10 minutes on an option day trade. So if you'd like to learn how to use options to day trade stocks, please join me at optionsontheopen.com. That's optionsontheopen.com, and thank you for your time.